Can you explain a little bit around, I guess, the risks that you're looking at in this current market with the around each of those main asset types, being retail, industrial, office? That's all right.
Yeah. I could probably speak to some of the like macro factors that you might see nationally, but obviously I'm based on the Gold Coast, so a lot of my observations will be fairly Gold Coast specific, but where I can, I'll try and give some sort of broader commentary. But yeah, so the industrial market, as I said, absolutely ridiculously strong performer over the last sort of 3 to 4 years. That's very much been driven by supply and demand imbalance. Very limited supply of industrial properties on the Gold Coast relative to very strong underlying demand. And basically that comes down to essentially there's no more industrial land on the central Gold Coast. Essentially, Yatala would be kind of where most of the new estates are located. So we've just seen land values go through the roof. And that's actually and then also we've got a really tight vacancy rate in the industrial market. And that's actually a national kind of factor as well. We've got, I think, one of the tightest industrial vacancy rates of sort of many countries.
Wow.
So yeah, we're kind of seeing that across the board. The office market, obviously, as you could probably expect, it got smashed during COVID with like a lot of people working from home. We had huge, massive vacancy rate blowouts kind of across the board. Interestingly, on the Gold Coast, we've had a very rapid absorption over the last 18 months, and I would say the office market's probably been sort of most improved out of those markets. We've seen, the vacancy rate tighten quite a lot. There's not really a whole lot of supply in the pipeline, so but still, just generally speaking, a riskier, I would say, like generally speaking, maybe a slightly riskier asset class, and you generally would see a risk premium for office investment assets over and above, say, a really good quality industrial asset. And then the retail space, obviously similar dynamics to the office markets, got pretty hammered during COVID with lockdowns and things like that. A lot of retailers really struggled. Vacancy rates in some of our core kind of retail precincts like Broadbeach, Surface, Southwark, just, really elevated, which puts kind of downward pressure on rentals and just generally isn't, not ideal kind of setup. It's been slowly improving, but I would say still pretty fragile. And you sort of, because economic conditions are a little bit weak, you've seen this flock to, I would say, like non-discretionary retailers, like your kind of supermarkets and things like that, as people move away from discretionary spending. Those like supermarket anchored little retail centers have been pretty popular. But yeah, that's kind of like a high level, broad overview of those kind of three main markets.
And there's for me, the reason why there's so much more, there's not a lot of information out there around commercial, or not enough for people to be able to have the confidence to even go it alone, even though some people do,